Welcome to my YouTube channel. This week we'll go through the performance of Nifty 500, which is the broader market, and followed by Nifty 50 and the leading sectors. And later on we'll also visit the global macro factors. And also in the end we'll be visiting one of the prime reasons why US is going to end war with Iran pretty much sooner than expected and the reason behind it. Now we'll move on to Nifty 500. This week it was pretty much good for the markets, though it was volatile. There was one sharper correction, that is on 19th of March, which was on Tuesday. Barring that day, rest of the days have ended in green. Looks like the market has taken a pause at this point of hour. The selling pressure continues and also the buyers are stepping in slowly, but we'll have to see the upcoming steps how this could transform into the next layers of investment for us. Now moving ahead to the charts of Nifty 500, I can observe that currently this week there was a pause signal. You can see the candle here which has formed with a longer tail on the bottom and the top as well. That means both seller and buyer are slightly active in the market at this point. And still we'll be hoping for the 2025 low to hold, and the active investment will be started at April 2025 low only. For that is for Nifty 500. Moving on to Nifty 50, we see a similar structure in Nifty 50 as well, wherein the market has taken a pause. Neither the sellers are still in control altogether and the buyers are slowly stepping in. At this point of hour, I would wait until it to cross or come around 22,000, that is near to 21,743 of April 2025 low, to begin my investments. Until then, I'll wait and watch what could happen until next layers. Now moving on to the leading sectors, Nifty Metal, which continues to perform well. And again this week there was some buying momentum, but again due to the broader market selling pressure, the market has been beaten in Nifty Metal. Moving ahead to Nifty PSU Bank, this week there was a pause in Nifty PSU Bank again. So we'll be hoping for a recovery over at this point, but still banks are under pressure due to the scenarios where there was a situation HDFC Bank CEO resigned, and that has impacted the broader markets especially with respect to banks. In the previous weeks, there were continuous selling in Nifty Bank as well, not just because of the HDFC Bank pressure due to the war conditions, but we see that these kind of scenarios where the price taking the positions even before the news comes out, this is always kind of a scenario where markets is always ahead of the news. That was one of the prime reasons there was selling pressure in the bank sectors. Now moving ahead, we'll move on to Nifty Energy, where this continues to pause again. There is no selling pressure, no buying pressure again, and we have not breached that 37,000 mark yet in the current week, but I'm continuing my investments with respect to Nifty Energy. Now we'll move on to the crude oil. UK crude oil has reached $110 and US crude oil is around $98, and there is no selling pressure yet in the crude pricing. As a result, we continue to be under pressure as India is the main importer of crude oil. As and when the price rises in crude oil, we are going to be hammered for sure. So this is still concern for us with respect to US oil. Now we'll move on to another index called dollar index. Now you can observe that dollar index is slightly breaking up out of its actual accumulation zone, which is not a very good sign for the equity markets. As and when the dollar index has spiked, we can see it has led to sharper corrections in the equity markets. Historically, that is how it has been. Now, you can see the post from Donald Trump of late, where he has given the high level information that war could be coming to an end in the shorter run. But what is the prime reason for that? There is one prime indicator in the markets which has pressurized Donald Trump to come to a conclusion. This is bond market VIX indicator. Basically, this gives an idea of how the bond market is going to work. Now, why we are talking about bond markets? Bond markets are the secondary markets where the majority of the turnover happens when compared to equity markets. And whenever volatility increases in bond market, that will eventually result in sell-off in the equity market. That means equity markets are going to get corrected pretty badly. In the past, we can see I'm highlighting the two scenarios, one with respect to March 2020 and other with respect to March 2023. On both of these scenarios, whenever the bond market volatility increased from the normal range to a very high peak range of 160s or 180s, there was a very steep correction in US equity markets. As a result, the broader markets, that is with respect to the global markets, we saw steeper corrections as well. If we observe today's market, we are in a similar phase. And if this continues, then the pressure on US government increases. So that is a very prime reason why we are expecting the war to be over soon, and this is forcing hands of the US government to end the war pretty much sooner. That's all for the video. Thank you.